Today, Bitcoin falls following the release of new economic data that came in well above expectations. The digital asset community reacts to key crypto ally Senator Cynthia Lummis announcing her retirement. And former CFTC acting chair Caroline Pham discusses what she hopes to achieve in her new roles at MoonPay. Welcome to CNBC's Crypto World. I'm Talia Kaplan. Major cryptocurrencies in the red despite the release of new economic data that came in well above expectations. As of noon Eastern, Bitcoin slid to the $87,000 level, Ether fell nearly 3% below $3,000, and XRP lost around 2.5% to $1.89. Now, the moves lower for crypto came as stocks ticked higher as traders continued to bet on the Federal Reserve lowering its benchmark rate next year, despite the release of that new economic data. This morning, the Commerce Department reported that the U.S. economy expanded at a 4.3% pace in the third quarter, much better than the 3.2% estimate that economists polled by Dow Jones had forecast. The report initially spooked stock investors into believing a rate cut from the Fed in early 2026 is less likely, but as of noon, stocks reversed course. Okay, let's talk about the top stories. Coinbase agreed to buy the clearing company as it dives deeper into prediction markets. Coinbase says the partnership would bring a team with deep expertise that would help scale prediction markets for the crypto firm. Terms of the acquisition were not disclosed in yesterday's announcement. Now, this development comes after Coinbase unveiled a slew of new products last week in an effort to be a one-stop shop for financial services, one of them being prediction markets. Next, a new bipartisan draft bill is floating in the House, aiming to smoothen the tax process for digital assets. Democratic Congressman Stephen Horsford of Nevada and Republican Congressman Max Miller of Ohio unveiled what's called the Parity Act over the weekend, short for the Digital Asset Protection, Accountability, Regulation, Innovation, Taxation, and Yields Act. As part of the proposal, there would be a capital gains tax exemption on regulated U.S. dollar stablecoin transactions under $200. It would also allow taxpayers an opportunity to defer recognition for staking and mining rewards until after those rewards have been received, among other things. Representative Miller said the country's tax code failed to keep pace with modern financial technology and that this legislation ensures the rules are clear for innovators and investors. And sticking with Capitol Hill, the digital asset community is sad to hear about the upcoming departure of crypto advocate Senator Cynthia Lummis. Last week, the Republican senator from Wyoming announced she would retire at the end of her term in the coming year. Following her announcement, praise from industry members as well as government officials came pouring in. Crypto czar David Sachs wrote on X that Senator Lummis has been a great ally on crypto and that he is very sorry to see her go. Coinbase VP of U.S. Policy, Kara Calvert, also weighed in, saying Lummis helped bring digital assets from the fringes of policy debates to the floor of the U.S. Senate. Now, Lummis has been a long-time ally for the crypto industry. As chair of the Senate Banking Committee's crypto subpanel, she helped push the Genius-backed Stablecoin Act into law over the summer and has been actively working to do the same for a crypto market structure bill. All right, for our main story, Liz Napolitano spoke with former CFTC acting chair Caroline Pham, who joined MoonPay as the company's chief legal officer and chief administrative officer. Pham discusses what she hopes to achieve in her new roles and provides her outlook for institutional adoption of crypto in the new year.
So, Caroline, I just wanted to start by talking about your departure from the CFTC. It comes at a really interesting time, a time when the future of crypto is hanging in the balance. Congress has entered its winter recess, and efforts to pass a market structure bill for the industry have stagnated. As a former CFTC chair who will now be keeping tabs on digital assets legislation for MoonPay, how important is it for you that legislative guardrails for the industry are enshrined into law, particularly ahead of the midterm elections next year?
Well, thanks again for asking this really important question, because I think we are truly at an inflection point right now for digital assets in the United States. You know, we started off really strong with President Trump's executive order, creating the President's Working Group on Digital Asset Markets, putting together this tremendous whole of government effort, which culminated in a U.S. crypto roadmap, the White House crypto report that was released in July. And then since that time, of course, we agencies hit the ground running. SEC Chairman Paul Atkins launched his Project Crypto. The CFTC, under my leadership at the time, launched the crypto sprint, which works hand in glove with the SEC's Project Crypto. So, using all of the authorities that we have at that time, right, that's why the agencies forged straight ahead and accomplished a number of things to realize the president's vision to make the United States the crypto capital of the world and implementing the digital assets report recommendations. Of course, that's what the agencies can do at the agency level, but it's been a tremendous effort to see Congress not only pass the Genius Act, but now make such significant progress on market structure legislation. And that's exactly what we do here in the United States, right? Congress makes the laws and then the agencies implement it. So it's a true inflection point. There's a lot of really great momentum. It's a very exciting time.
Now, you've done so much at the CFTC, but I want to fast forward to your new role at MoonPay. Could you tell us just what your three main priorities are in your new role there? In other words, what are three concrete things you want to accomplish during your tenure there that will allow you to say to yourself, okay, I've done a really good job here?
Well, what I'm really excited about joining MoonPay is the fact that MoonPay really is about having a global value network that's going to truly modernize and revolutionize the way that value is moved around the world. So when I think about what I'm bringing to the table, what really excites me about the opportunity is the fact that I used to work at Citigroup. I was a senior bank executive, and if you think about it, that is how for the past 200 plus years, payments and value moved around the world. That's how banking was for all of that time, of all of that history. But now, as we look to the future, there's a lot of very interesting infrastructure providers, new technologies like blockchain technology, new global value networks that are being created. And so that's why it's very exciting to me to be joining this new era of fintechs, where we're looking at new types of global payment platforms that's going to, again, revolutionize the way that value is moved around the world. It's really bringing in a new era for Web3 and beyond. And so it's wonderful to bring that history that I have of having robust controls and compliance and risk management in place, and then bringing that to something new, transforming the way that payments work in this new modern age, connecting between fiat and crypto, crypto to crypto, and powering on-chain applications. So all of that coming together, that's what I'm most excited about.
Historically, the CFTC and the SEC have tussled for primary regulatory power over the crypto industry. But in recent months, the two agencies have begun to work together a little more, even issuing joint statements on crypto regulations this past fall. Do you see teamwork between the SEC and the CFTC deepening on that front at all? With the agencies even perhaps sharing resources in the near future? And how far could their collaboration go based on what you saw towards the end of your tenure at the CFTC?
So what I said from the very beginning of my acting chairmanship, right, was that the agency was going to be getting back to basics and getting back to regular order. And what that means is also playing nicely again with all the other U.S. financial regulators. It was really unfortunate that in the past several years you had this turf war between the SEC and the CFTC. But I think we've demonstrated over the past year that not only have we worked very closely together as partners, as we always have for decades. I mean, really, this goes all the way back to the 80s, right after the CFTC was first created in 1975, of this long tradition and history of the agencies working closely together. Of course, my relationship with SEC Chairman Paul Atkins, and then now, of course, with new CFTC Chairman Mike Seelig, having worked with Paul Atkins not only as the chief counsel of the SEC's crypto task force, but also as senior advisor, I think that's exactly why Chairman Seelig is the right leader for this moment to bridge between the two, right? But bridging between CFTC markets and SEC markets and creating a holistic, comprehensive, fit-for-purpose regulatory framework, not only for crypto and digital assets, but especially for traditional markets as well. I really believe that here in the United States, what brings the most value is when you can trade what you want, where you want, and how you want. And I think through efforts that I launched with SEC Chairman Atkins, our joint staff statement that you mentioned, the joint chairman statement, the historic joint roundtable between the CFTC and the SEC, which we had on September 29th. By the way, the first joint roundtable for 15 years. Those efforts really lay a strong foundation for what's to come, whether it's implementing rules under the market structure legislation, harmonizing some of these outdated Dodd-Frank requirements that have unnecessarily constrained access to markets and capital efficiency. I mean, all of these things are very exciting for what's in store for next year.
Gotcha. Now, there was another thing I wanted to ask you. So earlier in December, you appointed Intercontinental Exchange CEO Jeffrey Sprecher to the CFTC Special Crypto Advisory Council. That was around the time your plans to join MoonPay became public, although rumors of your intention to join the company had been circulating for a while. Now, last week, a report emerged that the Intercontinental Exchange is in talks to invest in MoonPay. Some people raised concerns over the series of events. Bullish CEO Tom Farley wrote on X, "The fix was in reference to the timing of Sprecher's appointment and the news of his exchange's potential investment into MoonPay. What do you make of Farley and other critics' comments regarding that sequence of events and Sprecher's potential investment into MoonPay?
This is actually the first I'm hearing of that, and that's really disappointing for me to hear. I mean, I had gone on Bloomberg TV Live actually from a conference in LA earlier this year in May, announcing my intentions to return to the private sector at that time, because I've always believed in doing everything as transparently as possible. And once I announced that I was going back to the private sector, interested in doing that back in May, of course, I started to have conversations and have people reach out to me at that point in time. And I did all of that very closely with the CFTC's Ethics Council and made sure to recuse myself appropriately from any and all conversations. So, you might recall that I actually had been planning to leave the agency back in August because I was expecting to be replaced at that time by a permanent chairman. So I have been recused from MoonPay since August. We have not only clearance from the CFTC Ethics Council and the Ethics Office, we also have ethics opinions to that matter. And so I have actually been completely firewalled off from anything having to do with MoonPay since that time. So again, this is all news to me. I am sorry and disappointed to hear that even though we did everything completely transparently and above board, people like to engage in idle gossip and speculation. That's just very disappointing.
Now, before I let you go, I'd love to get your take on institutional adoption and how that might accelerate some of the exciting regulatory and legislative trends that we're seeing on the crypto front.
So I think what's really exciting going into 2026 is this realization that actually people have been building on blockchain technology and looking into tokenization of financial instruments and tokenization of real world assets. And of course, payments use cases since at least 2018. 2018 is actually when I first started working on digital assets and crypto in the private sector. And that builds off my earlier experience working on it since 2013 when I was at the CFTC as staff previously. So with 2018 really being that initial starting point for people looking at building tokenization, blockchain technology, market infrastructure, that's where I think it's finally all coming together for 2026, because the real catalyst, of course, was regulatory clarity. With the SEC's statements around token taxonomy, around creating more clarity for crypto custody, with what we've done at the CFTC under my leadership, where we looked at tokenized collateral guidance, potentially unlocking trillions of dollars in capital and collateral management using tokenized instruments. Not only that, but the digital asset markets crypto pilot program that I launched to allow Bitcoin, Ether, and other payment stablecoins to be used as in-kind collateral for certain derivatives trades. And then finally, of course, having listed spot crypto on CFTC registered futures exchanges. All of those are designed to really bring in institutional adoption. And the reason why is because it's bringing in the digital assets and crypto activity inside the existing US regulatory framework. What does that mean? That means the exact same rules that have worked for our securities exchanges and for our futures exchanges for 100 years are the exact same rules that are going to be applied to crypto. So instead of Americans being on offshore crypto platforms where they might not have protections against uncontrolled losses, they're going to be with the rules that they know, the policies and procedures, the risk management controls, the exact same regulatory framework that everybody's been used to for 100 years, which is the gold standard in the world for investor protection, for liquidity formation, and for capital efficiency. All of that means 2026 is a year of institutional adoption. It's very exciting. I can't wait to see what's next.
Okay, that's all for Crypto World today. We'll be back again tomorrow, and we'll see you then.